Good evening, everyone. Sterling here with the daily market review for Thursday, August 29th, 2013. We'll try and make this review a little bit shorter. I know the last couple reviews have been quite long, and try and shorten it up just a bit. I hate doing a review that's nearly half an hour long. I'm sure you guys don't need to listen to a 30-minute review either. So alright, let's get into today. Basically, not a lot of activity with the pound or the euro today, and really, you look at the pound, if you look at our tradable time, or the times that we look to trade, and measure this here, basically we had about 48 pips from high to low, and that's I'm talking extreme to extreme, extreme high to extreme low, during the times that we look to trade on the pound. So really tame activity for the pound. And you take out the two extremes, and you go off the candle bodies, and you had roughly about a 37-38 pip range, so really tight range there, and most of the price action really within about a 20 pip range. So anyways, the only opportunity that came very close to coming together was what we talked about here in the room, and that was basically our stop run of the 1.5520 level. We came down, and we showed a stop run of, I'll zoom out here and show you this level. So that might have been a little bit lower. But anyways, looking back at around the 1920 level, and that region, the stop run region, we broke through that level by 7 pips. So whether you were looking at the overall lows there, or going up to the candle body, either way, you created at least a 3 pip stop run at that level. And the confirming candle here, what was going to be the confirming candle, I was actually watching the setup. I was hoping to see it come together. But this candle here was actually the stop run candle, but it almost confirmed up as well. And so that would have been the setup. Now, after that candle closed, it didn't quite engulf the previous candle, and that's why I was saying to myself, okay, well, I'm going to wait for it to satisfy the rules of a confirming candle. This one didn't close above the body of the previous candle, although it did close in its upper 1/3 quadrant. And so basically what I was doing is I was going to say, okay, well, I'll treat this as my stop run candle, and I'll wait for the next candle to confirm up. Well, the next candle didn't confirm up, and then if you flip over to the euro, just walking through what I was thinking at the time, looking at the euro, we were actually starting to break. Okay, there we go. Starting to break to the downside here, and pushing back down a little bit further. So flipping back over to the pound, we never got the confirmation up, and that's really the point of the confirming entry. This is a great illustration of how the confirming entry can protect you, and definitely a protection here today. So almost came together, not quite, and fortunately it didn't. Coming down a bit deeper, if we look at a stop run of a little bit lower level here, zoom out, bring this up. So let's bring that down here. Basically, let me get this into place here. We had 1.5000, and that was a potential stop run point from back here, and we came in early in the New York session, or excuse me, earlier in the London session, tested it twice, didn't create quite a big enough stop run in order to consider it. Wasn't quite a 3 pip break, and then over here we created the break, beautiful confirming candle up, strong pullback, and this trade would have been closed out either at break even if you moved to break even going into New York, or it would have been closed out for probably about a 10-12 pip profit going into the New York session. So either way, as far as the setup is concerned, I didn't really care for the time of the day, a little late in the trade or late in the day, but the setup was absolutely beautiful. When you look at a stop run, the confirmation here was beautiful. The pullback was beautiful. Everything about it was clear, and really solid level too. Just the only thing I didn't like was the time of that trade. It was late in the session. Preferably you're taking trades no later than 6:30, and that's really still even pushing it a little bit. Just because when you go into New York, you run into a situation where you're subject to the next session's manipulation. And so even if New York wanted to drive the price up as well, it's possible they come back for a deeper stop run. That's exactly what they did. So that's why the session rule is there. It's, going back to Tuesday, I believe. Tuesday we saw the market create an entry. The New York session rule would have kept us out of a profitable trade, and it did keep some people out of what would have been a profitable trade. So it's not always going to serve as a protection, but again, if you see it 100 times, what's the best rule? And more often than not, moving to break even or closing a trade out going into 8 o'clock is the better rule, protecting in some way, shape, or form. Flipping over to the euro, not a whole lot to talk about with the euro. When we look at the euro as far as some lows that we had, our lower level of 3,300, we blew right through that point, and from there, our manipulation points based on the reviews, manipulation points weren't there. Now, with the euro, what we had, remember yesterday, although we didn't have a directional bias, it was possible we were starting a push down. We just didn't know. That's why we were trading it like we're in level 3 accumulation. And then today we had our second push to the downside. So now that cycle is clear. And as I always say, when you look at cycle, all you're doing is you're asking yourself 3 questions every single day. This time of the night, you're looking at the market before the European London session opens. You're asking yourself 3 basic questions. Am I in a down cycle? Am I in an up cycle? Or am I in level 3 accumulation? And so let's start asking ourselves those questions. Am I in a current up cycle? Well, obviously not. We've just seen 2 cycles to the downside. So obviously not in an up cycle. Am I in level 3 accumulation? Answer that question is obviously no. And the third question, am I in a down cycle? Of the 3, that is really the only logical point to this, and if we've seen 2 cycles to the downside, then we should expect that third. The only thing that I would caution about expecting that third push to the downside is where the pound is at, and the potential for the pound. Yes, I think tonight we'll treat the pound like we're in level 3 accumulation, but I wouldn't, even though I'll look for the third push down on the euro, I'm going to look at, I'm going to mention some potential turning or ending points for that third push, and that may be a little bit shorter than normal because of the fact that it is Friday and it is the end of the month when you do tend to have the market turning around, positions that were placed earlier in the month being closed out, and with that being said, people getting flat towards the end of the month, and given the fact that we've been running to the downside, possible we may see some closing that position and pushing back up. It is still possible that the closing of their position has been shown over the last 2 days, and they may just continue it down. And that's why we'll look at some manipulation points on both sides of the price to account for the stopping of the third push, and also the expectation of trading the third push as well to the downside here on the euro. So going over to the pound, we'll start with that first when it comes to cycle, and addressing what I said here a minute ago with the pound. We saw a finish cycle down the pound, and we had what we term as an extended push, and then we had this potential push up here the previous day. So given the fact that we've gone sideways from that, we're in the accumulation that comes at the end of a previous cycle, and it's possible it's going to give us a second push up, but because we're chopping back and forth, I feel like looking at those manipulation points to both sides of the price is the safest option right now. Again, also considering where we're at in the month, and really considering the fact that you have a world that is potentially going to war, superpowers that are going against each other, and people talking crazy, and that's definitely a big effect on the currency market now, because that's kind of an unprecedented thing, at least in anybody that's listening to this, something that could have such large implications. Generally, most people listening to this have never traded during that time, and so it's a wild card as to how it's going to respond. So with that being said, it's much more important to remain open to either side because of those different possibilities, and at the end of the day, letting the manipulation tell the story as to direction a bit more. So when we look at the pound, going into our manipulation points here for the pound, I think we have some decent points. We'll flip over to the current price here, and the overall low that we're at is pretty clear as far as this low is concerned. I'm going to move that up to about 85, and that's basically the low that we set here today. It was a pretty clear, fresh low, and I'll look to use that. Now, one of the reasons I'm going to remove that 5,500 level is because as I bring this cursor down, right here is 55, and you can see how the price really got sloppy in around that level. Yes, there was some tests in around it, but it kind of just got a bit sloppy as the price continued, and so I just kind of lack the faith with that 5,500 level now, given the fact that it did get a bit sloppy, and I'm going to simply remove it. Looking to the upside, you move to the upside, the first level that we're going to come into is 55.19. This has been a very clear level. This level here, 55, yeah, we'll leave it at 19. You look at the test that we had here today, and again, it just made this level stand out even more. Came down early European session, tested. Once it broke, came back up, was a stop run point, came back up, tested again, and then again tested here during the Asian session. So that's going to be my first point to the upside. The level beyond that is still very clear, or it's a bit more clear here today with the Asian session holding roughly in that area as well, and we'll call that level 55.50. That's been a point we have been using, and we'll continue to use here with the pound. Now going back a bit deeper, we run into that kind of same situation where we had a level at 55.94 and then 5,600 as well. And what I'm going to do here basically is continue to use, move this up just a touch, this one's about 5,600, and basically what I'm doing is I'm mentioning quite a few more levels as I zoom way out here. You can see that I'm mentioning some levels that are quite a ways away. It's unlikely it will get past 5,600, which is why I won't mention any points beyond that. The overall high there that I just took away is pretty obvious, but I'll leave those points in because it's really the only likely points that we'll get to. Now, going to the downside, we mentioned 1 point. I'll zoom back in here for the others. So I mentioned 54.80. That's pretty obvious. That's the current overall low, and the way stops are trailed, I would fully expect stops to be beyond that point. Now to the downside, in my opinion, it's not quite as clear. I'm going to remove these two lines here, make it a little easier to see. Okay. Now to the downside, again, it's not quite as easy as just looking at the overall low because it was such an aggressive low that we set. So we'll zoom back a little bit. And what I like about that low, and one of the reasons that, zooming in here, let's go into the 15-minute chart and I'll give you the date I'm going back to. I'll show you why I had that line there. But basically, what I had is I had a line at 26, but it was also based on the test that we had on the 13th and the 14th of August. So again, going out to the hourly chart, there's a 15-minute of 13th and 14th of August. Go back out to the hourly chart and really zoom out, and you can see what I'm talking about. This is a very clear low, and again, come down and tested that almost to the pip here today. So going back in, zoom back in. Normally, I would go and pull it up to the candle body. You guys know I use the candle body more often than not, but because this level had a very clear test in the past, and we tested it to the pip, that's why I'm going to use the overall wick. When we have a situation that had previous tests, I will use the overall wick. When the overall wick is in no man's land, then I'm going to pull it back up to the candle body, and that's just a preference. It's all about what is the highest probability level that people are going to be looking at. Because that level had very clear tests, not just now but in the past, is why I'm going to use that point. So not a whole lot of levels in between the 85 and 26 level. You could probably, you might be able to look at where I'd normally draw that line, 54.50, but I feel like it's a little bit lower of a probability, which is why I simply removed it. If the pound is going to turn somewhere in between that no man's land, then that's what's going to happen. I may miss that trade. But as far as those levels are concerned, I really like the points that are on this chart right now. 55.50 is really clear overall high. This 55.19 level has just proved itself many times. Really solid point. The last overall low that we set, 54.85, very clear level. And then obviously 54.26, really solid overall low as well. So I like the levels on the pound, really solid levels with the pound. And I'd be happy with a setup from any of those points just because they are so solid. Now with the euro, get into our manipulation points here with the euro. You know, to the upside with the euro, draw this out here. Basically, all I'm doing is I'm drawing a best fit trend line through all the tests that we've had on the way down. We came down, tested this level, came down, created a little bit of a stop run through it, and this level's 32.50. Once we came down, broke below it, came back up, tested again, came back up, tested again during the European session. So the trouble with the euro here is that you just don't have great levels. You go back up beyond that, and you have 3,300. But let's scroll back in time a bit here. And, okay, so this level is 3,300. And the last test that we made were right here. So, you know, anything between the overall low there of 32, or the first point, 32.50, and 3,300, you just don't have a lot. If you look back at the last time we came into those levels, it never responded to anything else in between them. So then you scroll forward here today, and still here's 33, so we're still looking for something below that. And then there's again 33, and you just don't have a lot in between 32.50 and 3,300, which is why I'm not going to be looking at any point in between 3,300 and 32.50. You know, I looked at that level quite a bit. I looked back in time, kind of tried to find something that I could justify that I would believe the rest of the market is looking at. And you know what? At the end of the day, if I'm not willing to put my money on the line with the trade, I'm not going to draw a level just to make it a higher probability we'll get a trade. If I'm not going to put my money on the line at that level, then I'm not going to mention it as a high probability point. Now, like I mentioned with the euro earlier, we are going to look at some lower manipulation points today. The reason I'm going to do that is because of the way the correlation between the pound and the euro is. That's one of the reasons. If the pound starts its cycle up, that may mean that the euro cycle runs a short cycle. Now, we don't know that. You know, that I'm just talking about the possibilities of what could happen. And because that is a possibility, because it isn't the end of the month, and because these things have been out of correlation and they're due to sync, that's where that probability comes into play. And with those wild cards, it means that we may very well see that. And so I want to be able to trade it if we do see it, and we have some clear overall lows with the euro, which are levels that are worth trading. And so, you know, at the end of the day, as I always say, the manipulation will be the guide. If it is going to give the third push and just give a standard normal third push, well, then our lower manipulation points will break. More than likely it will not set up for a trade, and that's again what the manipulation is really designed to do. So we'll kick it off with the overall low of 32.21, and then we'll start to zoom back here. And I'll show you guys the overall low. And then we'll go out to the hourly, and I'll show you the broader perspective. But we have 32.21, so that was our overall low. Now, what we have beyond that is we have a test of about, get rid of that line. We have a test of about 32.05. So those points are separated by 16 pips. Go out to the hourly chart now. You can see that this is an overall low from the 15th of August. Normally, again, I pull it up to the candle body, but I wanted to leave a little bit of separation in between it. The trouble with the euro, and I guess I won't say the trouble, the part where really you're going to have to see a quality setup is the fact that we have good manipulation points staggered down. 32.21 3221, which is our current low, is a solid point. 3205 is a solid point. And then we'll zoom back even a little bit more, and you can see this low back on the 1st of August. Go back into the 15-minute and zoom in a little bit. And you can see this low here, 3188, was a really solid point as well. In fact, it was a stop run point for a push to the upside. So we have 3 solid levels on the euro, and that's gonna mean we need to obviously really see that clear setup, allow the manipulation to do its job. It's either there or it's not. We're seeing a clear setup, or we aren't, and that's the point of being patient and waiting for the confirmation. We discussed some benefits and some drawbacks to the confirming entry, and I've always said that any of the drawbacks that you could possibly think of with the confirming entry are heavily outweighed by the positives, and that's definitely the case in a situation like today where you have these different possibilities. You want to be able to trade them, and so you pick your good points and you trust the strategy, you trust the confirming entry at those points, and you run with it. And that's exactly what we'll do here today. And we'll leave those 3 lower points in as potential stopping points for the third push to the downside, if we do in fact get it and the correlation does, the pound doesn't push up and bring the euro with it. So those lower points, 3221, 3205, and 3188, and then to the upside, 3250 and 3300. Alright guys, that's going to do it for the review. As always, if you have any questions, feel free and shoot below the review or give us an email. We will get back with you. I hope you guys have a great trading day tomorrow and a great rest of the weekend. Enjoy your long weekend. Sunday, I'm going to have to see what banks are closed. Depending on who's closed on Sunday, it depends whether we do the review or not, but either way I'll update it and put some type of an update in the daily market review section if the review isn't going to be posted because of closed banks. So anyways guys, that's going to do it for the review. I hope you guys have a good one, and until next time, happy trading.